بسم الله الرحمن الرحيم والحمد لله رب العالمين والصلاة والسلام على سيدنا محمد وعلى آله وصحبه أجمعين. Welcome everybody, Asafa shareholders and employees in this our second discussion session for 2023. لله الحمد, just to inform you that the company performing the last 6 months very good with the improvement, and it will be reflected in the presentation from the finance team. At the same time, the company successfully, لله الحمد, have been merged with our logistic company, which will show a better performance in efficiency and profit, inshallah, for the next or for the coming 6 months, inshallah, until the end of the year. So if you allow me, gentlemen, we will ask Mr. Rafiq Chaudhary, our CFO, Asafa CFO, to present the performance for the last 6 months or the first 6 months of this year. Rafiq, please.
Thank you, Suhail, for the introduction of the Asafa. The first few slides are the introduction, which is the same as we have done earlier. We have presented in the previous yearly performance also, and the 6-month performance during the 2022. Therefore, we will go to the financial result for the first half of the 2023, and we would present the financial result that will be giving the overall performance of the company for the first 6 months. This is the income statement for the 6 months from January 2023 to June 2023. We would like to inform the investors and the shareholder and the research companies that our production, our capacity utilization is at full capacity now. Going from the 2022, we are running at the full capacity, and this 6 months also, our capacity utilization, we are operating at the full capacity. The sales, there is a little drop in the total revenue. This is because in January 2022, we were having some carryover stock from the 21, which was sold in the first half of the 2022. This is the only difference. Otherwise, our production is at 100% capacity, and the sales is also showing the same performance. And if you look at the gross profit, there is a significant improvement in the gross profit. It was 5.3 million. If you look at the parent company, but I'll present the group result. So which was 5.6 million, the gross profit, and now the gross profit is for the first half of the 2023. It is almost 7.3 million, which is more than 30% improvement in the performance of the company. And similarly, the net profit of before the result from the associate company, that is also showing a significant improvement during the first 6 months of the 2023. It was last year, it was almost break even, but now there is a 1.6 million before the result from the associate company. But even after the result from the associate company, there is 1.4 million was the profit before the tax, and the net profit was net profit also was 1.37 million. So which was against the loss of the 100,000 for the previous year, from January 2022 to June 2023. The same is reflected in the balance sheet, our equity, and the value of the share that has increased also, and all other the parameters. If you look at the balance sheet, those are almost the same which was the end of the 2023 and the 2022. Here we would like to ask all the participants, please ask any question. If you have any question, we are available to answer any question or any queries you have.
Please, if anybody have any question or ask for any kind of clarification, we are here available to answer you.
Hello?
Yes, if there
Yes.
will be
Hi.
no question from the, sorry, okay. Go ahead,
Hi,
please.
good morning. Good morning.
Good morning.
You just said that the variance is primarily because of the carryover stock from 2022. But what I'm seeing is between first quarter of this year and second quarter of this year, there's a 10% lower sales in second quarter. So can you just tell us what are the reasons for that? Are you seeing any drop in realizations if your capacity utilization is stable?
Okay, one thing, because I mean the season, which is normally the month of the June, even starting from the May, after when the schools close, so there is a little, the reduction in the offtake. So as I mentioned earlier, that production is going at the full capacity, but yes, there is some stock increase end of the 2000 and June 30th, 2023, which is mainly the difference, small difference in the if we compare the quarter 2 2022 and the quarter 3 2023. So that is the difference because of not because of the realization. Our realization is smooth. I mean, it is almost going the same level. But yes, we have some stock carry increase in the June 2023, which will be, now it will be liquidated in the Q3 of the 2023.
Okay, got it. Thank you. Most of the FMCG companies have been saying that PSEP is allowing them to increase their prices. There was a lot of pressure due to the raw material price increases and everything. So most of these FMCG companies, including food companies, are saying that they got approval from PSEP is in.
Okay, so
have we done anything?
I will ask, particularly on the pricing, because the CEO is directly looking after this matter. He will speak, but before that, I would like to just mention that this material price increase, it is truly affecting all the industry, even the food industry also, because the material prices, if you look at the bill before the 2020, the material prices were quite consistent, but there was significant increase. Even at one point in time, the material prices even touched 100% increase. Like corn is our major commodity, which was on the average $200, $220 we were buying. It touched even $400 also. Now there is a reduction. So that has impacted our 2022 also and the 23 also. But because of the total volume of the project and other, we are honestly able to arrest that impact little bit and show the performance. Because there is a performance as compared to the last year, that is the reason we have not this time spoken about the price increase, because our performance has increased, which is mainly certainly we are getting the performance because we have the loyal customer, we have the brand recognition, in particularly in Oman and other GCC countries also. So that is the reason we are getting the better realization also. We are selling as a premium brand. So at the same time, we have, looking at the price increase and other, we have applied for the price increase also. So I would request our CEO if he can speak on this topic about the price increase.
Yes, regarding the price increase and the government support, all the companies which have activities of feed meal have been approached the government since the prices increased end of 2021. And the government provide a mechanism to support the company, which is covering only 33% of their increase in the price for the second half of 2022. And for this year also, since from January to June, from January to June, the companies continues support the company with the same mechanism, which, as Rafiq said, that it's not making a big difference in as a subsidy amount, but still the price in the high side, which affect other companies. But because of our performance and our capacity, alhamdulillah, we can absorb that.
Yes, I understand that, because we are what I'm seeing is the subsidy impact that you have announced is only 28,000 riyals, but at the same time, cost of materials that you are using is around 25 million riyals. So I can see that the impact is not less. So how are we planning to how we were able to absorb this cost increases? And my question earlier was not with respect to the raw material price impact, but with the price impact of the selling price impact. Is PSEP allowing us to increase the selling price?
Okay, the selling price, I mean, our prices are from the 2000, I think, 8, 9. We are selling at the same prices. We have applied for the price increase, but we have not this price increase we have not got because we have not applied any price increase also currently. As regard your question that the prices.
Yeah, we apply for the price increase, Abu Nawha, but it's still in the discussion. Still there, we don't have a final decision from the government for increasing the price.
Yeah. But to answer further to your question that how we are, tackling this issue of the price increase. So first of all, we said that now the size of the project and our other efficiency in the other operation that is helping us to absorb the impact of the price increase and even then show the better performance. Now this, if you look at for the next year, from July onward, we are facing a bigger issue for the finance cost also, because the finance cost that is also now increasing. The LIBOR has gone more than the 5.5%. So that is also, other than the material prices are a little bit now coming to the lower, not to that similar level, but okay, it is improving, but the finance cost is increasing also. So, but we have to live with it. We have to, show our performance. We have to go for the better selling. That is what we are doing. Though we are facing the difficulty from the imported product, which is they are coming at the cheap prices in country, but we are lucky that we have the loyal consumer and we are getting the benefit of that.
Okay, got it. And you have already addressed one of my next question, which is about the cost of funding. And thank you for that, mentioning that. And another question that I have is on the status of your associate investments. You have some 24% in Usul, and you have return of Nama Poultry. So can you give us some status of your the operations of these projects on Usul and Nama Poultry, and particularly on Nama Poultry? Are you what's the status of that project, and will you be required to put in additional capital into that company?
Okay, so as regard the first, I will speak a little bit about the Nama because I cannot speak much on this one because we have already taken a decision that we are not going any further investment in the Nama Poultry. And Nama Poultry, they are in the process of restructuring. So so far, honestly, because the things are not clear to us, that is the reason last year we have made the provision for the investment in the Nama Poultry because they are in the process of restructuring now. But what will be the outcome? That honestly, it is difficult for us to answer anything now. As regard our other investment in the Usul Poultry, where we are 20% shareholder in the Usul Poultry, that project has now started. It had started at the full capacity because this is the first year that they will be going with the full capacity production, but not full capacity, but almost they will be touching 85% or 90% they will be touching. But to be honest, though not better not to comment, but overall industry, poultry industry, which is the market for the Usul Poultry, they are in the stress. If I look at the in the region, so that and there is an oversupply of the hatching egg currently because of, even if you look at the what is the situation of the poultry industry in the Turkey, there is a disease problem there. So because of that, currently there is an oversupply of the hatching egg. So they are passing. This is a cyclic issue in the poultry industry, particularly in the breeding industry, which they are facing. So that I think will be over maybe in the few months, and their performance will be certainly will be better. And because they are at the full capacity, their production performance and their efficiencies, they are running at a good capacity. But yes, they are facing a challenge of the current market situation, which is, again, I said, it is a cyclic issue and it will be over in not very long. I think it will be over soon.
Got it. Got it. Thank you. And one final question is, that I have is, are we expecting any, when should we expect the decision from the government with regards to the price increase?
Yes, yes. We have been discussing with the government for almost the last 3 months about this issue, and still the discussion going on. And this very sensitive area for the government to decide. So we are following them, and any change in the price, we will inform all the shareholders about the increase.
Okay, thank you very much, and wish you all the best.
Thank you very much. Any more questions?
Hello?
Yes, please.
Yes, please.
Hi, good morning, gentlemen. This is Bishan Bhalla from Vision Capital. Thank you for the answers so far. Just had a few queries. First one is, just wanted to understand from you regarding, your sector and the market. This is more of a general query. If you could just give us some sort of idea about the competitive landscape in terms of what's the market size, what is the percentage of imports versus local production, and sort of how you've seen that evolving over the last 2-3 years, because you said it's a competitive industry and you have local customers, so that helps. You have loyal customers, so that helps. But if you could just give us some sort of insights into what the market size is, how your market share has been over the last 2-3 years, and sort of what is the overall mix. Let's start with that, please.
Okay, so the market size if you look at the Oman, I mean, it is Yasser. The exact number is. Can you speak the number?
Yes, the market size, according to the what we have taken estimates from the custom data, it's around 203 ton, and uh, the total production or total import is around from varying from time to time according to the cycle from 60 to 70%.
Yeah.
Sorry,
So,
so if I heard that right, total market size is 203. Sorry, if you could just repeat that, I didn't hear
so
you.
200, I mean, 200,000 metric ton. That is the total market
Ji.
size. Okay,
Yes.
and out of this,
Okay.
the production, I mean, the import is above 60%. I mean, if we look at the
Okay.
local production, that is around 35 to 40%. That is the local production. So there is still huge reliance on the imported product. Okay, and
Yeah.
if you look at the Asafa, I mean, the Asafa market, Asafa production is I mean, around 42,000. So which is I mean, 25%. I mean, if you look at 20%, 20% of the total market size. So that is the market size, which is the, I mean, Asafa, if you look at, but Asafa is exporting some percentage because it has already the established brand in the other GCC countries. So they are exporting also. I mean, the current now it is around 30%, Yasir, our
Yes.
export. Yeah.
Yes.
So 30% is we are exporting and 70% we are selling in the local market.
Right.
Sorry, if you repeat that, 70% is local market, 30% export.
Yes.
This is a Safa.
Understood. Yeah, understood. And if you could just give us some insights into price comparison, because you said you have an established brand, etc. But one of the reasons, if there is such a huge sort of shortfall in the market, one of the primary reasons for exporting would be better pricing overseas versus local markets, right? So if you could just give us some insights into the pricing difference between local and export markets.
Okay, so the pricing difference basically, I mean, there is a huge pricing difference, but that pricing difference is not. I mean, we cannot take it because there is the quality issues also, because at the Asafa quality, what Asafa is feeding, what Asafa breed, I mean, what Asafa is, how they are growing the birds, that is not the many of the imported products the same situation, because mostly the product is coming here from the Brazil, but that is not from the from the same poultry house, because Asafa is only producing its own poultry houses, controlling the quality, starting from the breeder farm, producing the feed for their birds and slaughtering them, not mixing any other, I mean, the feed from the third party or any bird from. So there is a huge quality difference also. And that is the cost is also. So which Asafa is really enjoying from the consumer also. So that is the reason. I mean, if you look at the imported product, because they are facing difficulty in selling. So sometimes, I mean, they are selling at a very cheap. If it is reaching near the expiry, they have to sell. It's a perishable item. They are selling at a very lower prices. So we are not comparing with the prices of the imported product. We are only looking at our quality, our brand, and our service. So we are not honestly comparing with the imported product pricing.
Noted. But my question actually, thanks for that clarification. That was also a further question. My question was your sales mix for Safa. The sales mix is 70-30, where you have a local sort of supply as well as an export market. Now, one of the rationale for looking at export market is better pricing. So I was asking about the pricing difference for Safa between the local and export markets. Not
Same price.
for Oman market.
Same
Same price.
price. We are selling at same price. Sorry, I think I misunderstood your question. But we are selling at the same.
So that's fine. That's fine. But then, given if out of your overall 42,000 metric ton, if the local market can absorb the entire quantity, or do you think there is because of these cheaper imports, that's the maximum you can sell in your local markets? Because why would you incur extra cost at the same price?
Honestly speaking, you have answered yourself. I don't want to answer the.
Okay, noted. I got it.
Because you answered
That's
yourself.
fine.
Honestly, okay. Yes, that's right.
No, that's. I mean, I thought it might, but that's fine. Okay. Next question, and my colleague Joyce raised this, and you mentioned regarding the finance cost, right? You mentioned how sort of the finance cost has gone up for the company. Now, if I look at your net finance cost YOY, please correct me if I'm wrong. If I look at the net finance cost, your overall finance cost for the group, was the total interest expense for 2022 6 months was 1.53 million, right? Versus 1.27 million for 23. So YOY, in fact, the finance cost has gone down. I have not seen any significant reduction in debt. So when you talk of LIBOR going high, that's effectively that effect should be the other way around, where 22 finance cost should be much lower than 23. So if you could just explain that part, sir.
Okay, I will just look at the number so
Sure,
that yeah. Just a minute, please.
It's approximately last year was 1.54 million and this year is 1.27 million. So when we look at look at the reverse trend, and for no change in debt, it's a bit. Could you explain that?
So there is a reduction. There is a small reduction in the term loan, very small. I mean, I agree that there is not much difference in but there is a reduction in our working capital finance. That reduction is there also. This is number one.
You in the middle. I could not hear you. I think your answer, the first part got cut out. If you could please repeat
there are
that.
Two factors. One is we negotiated the better price with the bank last year, and that was probably for the second half, it impacted the second half of the 2022 and the first half of the 2023. So there was a price negotiation also, number one. Number two, there is a small reduction in the term loan. Term loan is almost same, but there is some reduction in the working capital finance. So that is also so this is a mix of reduction in the working capital finance and the price negotiation with the bank.
Okay. All right. But okay. But having said that, LIBOR has jumped up to 5.5%. Do you expect
okay,
that
so I will tell you, our negotiation was up to the June 30th, 2023. So now when the time, that completed, now from the July 1, we are facing the heat now. The price of the finance cost has increased. And we are trying to, again, negotiate with the bank for some better pricing. Certainly, there is a price increase. It will not be the same price. Price increase is there, but the price increase which the bank is communicating now, that is pretty huge. But we are already successful to reduce something, and we are still trying to reduce further.
And if you could just, let's say you achieve the reduction, let's not talk about what the bank is proposing. Whatever proposal you have given the bank for a reduction in interest cost, if that were to be sort of the midpoint, what sort of escalation in finance cost are you seeing in the second half? So we have a 1.3 million finance cost in the first half. Bank is quoted a number because the new rates applicable from July. You've gone back to the bank and negotiated. So let's say your negotiation is successful versus this 1.3 in the first half, what number could we look at in the second half?
Okay, I will tell you that I mean, because of the huge labor increase and because last year we negotiated the price. So if I look at according to the other bank prices, so the bank is now asking 1.25% increase. So the 1.25% increase means it will be around 500,000 for the year impact, which will be 250,000 impact for the 6 months. But we are, I mean, we are trying to negotiate something. I mean, 50% of what the market currently pricing going on, so that we are hopeful we will get there.
Okay, okay, fine, sure. So let's say in the best case scenario, if your discussions were fruitful, instead of the 250,000, you would have between 100 to 130,000 real half yearly impact, and let's say between $250,000.
We will have 120,000, 120,000, yeah, 130. So that impact is going to come. Yes.
Noted. No, that's fine. Just wanted to understand sort of what sort of impact.
Yes, please.
Understood. That's
So
fine.
that is going to come. That's fine.
Sure. That's understood. With regards to, you mentioned, you're currently in discussion with the government for price increase, and you expect some sort of answer sooner than later. But if you could just give us some insights, you mentioned the selling price has been constant for a very long time. How often have you had these discussions with the government, or just because of stable input price, you've never discussed this? Have there been previous attempts to negotiate the price previously? If you could just give us. Let's say in the last 5 years,
getting the feed subsidy. We were getting the feed subsidy until the 2015. Yasser, 2015?
16.
So until 2016, so there was no point to discuss any price increase. And later on, the material prices were stable. So this is only the material prices started increasing in 2020. And I mean, then the prices started increasing. 21 was the highest prices, 21 and 22. So then we started, I mean, discussing, we applied. So now we are discussing with them for the last 2-3 years. But now there is some reduction in the price increase. So I think, honestly speaking, looks not very quick result on this side.
Noted. And so in your experience in our neighboring markets, let's say, within the GCC and some of the other markets, what sort of price trend have you seen? Because at the end of the day, you export as well, but you said you export at the same price. So are these markets also seeing some sort of price control? Because otherwise, if there's a price escalation in those markets, automatically your product should also be sold at a higher price in the local market.
Yeah.
So if you can just give us some insights into that.
UAE has given the price increase. Qatar has given the price increase. Kuwait has given the price increase to us. I don't know about the market. I don't know. But they have. I think they are giving case to case. But UAE and Qatar, they have given the price increase.
Yeah.
Right.
Abu Nafi, just to clarify this point, that Kuwait, the mechanism of the market is different because it's mainly tamwil through the government subsidy.
Right.
UAE and Qatar, as you said, that they give a price increase according to their regulation there.
Okay.
They are given the price increase. Yeah, but to answer your question, realization, I mean, our realization is same because we have to, I mean, certainly we have to incur some cost also there I mean, if we are calculating, so I'm saying that our realization is same after the extra cost, which we have to, like the transportation and the agent cost, that after that one.
No, I completely understand. I was talking of a net realization. So I completely understand when you go overseas, the moment you step overseas, there's freight cost involved, there's an agent markup, there's some sort of commission sharing. So I completely understand that. But as a trend, I was seeing, is this entire region sort of, and like you answered that saying, every market has their own policy, but in some cases there is an exception and you are given a price increase. So let's say compared to yesterday, today you're better off. the net realization compared to yesterday is better off today because there's a slight increase. Now, the net number remains the same. So that's fine, sir. That's all right. Just one sort of final, thank you for all these answers, right? But sort of just a parting comment in terms of where do you see the company in terms of its margins, etc. We saw a big escalation in raw material prices previously. You mentioned there's a bit of cool off in these prices, so you expect sort of input prices to be relatively stable, and your selling prices or realization is stable. That's not going anywhere. We don't expect any increase in that. On sort of on a net margin basis, and I understand there's a slight impact of finance cost. I mean, time will define whether it's huge or it's marginal. But what sort of sustainable margins is the company looking at? So we can look at an EBITDA number if you don't want to factor in finance cost, and then a net number. What would be a target aspirational number for the company over the next 2-3 years, given the entire sort of set of scheme of things, sir?
Yes, I mean, we have, because the 2021 was the first year when we start the expansion, and that was the year because the prices were also huge price increase and the initial running cost, and where we went through the learning curve. And 2022 we have shown the improvement, and 23 will be further improving. I mean, going better than that. And now, if you look at the 2024 and 25, the impact of the price, because we had the huge cost increase in the material prices, so that has come down. So if it will sustain, if it will not go increase again, something will not happen like the previous price increase. Something happened internationally. I mean, the war and that thing not happen. We are expecting better performance. I mean, better this year certainly, but more than the 23 than in 24 and 25. And then later on, Safa has think about the capacity increase or this thing, something to show further performance.
Okay. So on operating level, again, these are just numbers. I understand. I mean, I don't mean to put you to sort of the task with regards to these numbers, but your 2017, 16, 17 numbers, you had an operating margin of 16, 17%. We're currently at around 11%. Would we lean towards the 16, 17 numbers, or has the dynamic completely changed and you could say a 13, 14% margin is more sort of realistic?
You see that those margins which you are talking about, I mean, if we look at the 2016, so if we take out the subsidy part, then yes, and again, because that time, if you look at the two commodity, the material cost, that was I mean, the corn, I earlier told that it was 200 metric ton, and still, I mean, we are buying. I mean, if we look at the current prices, at this moment, the price have come down to, let's say, $255, $260 per metric ton, which last year was even touched $400. But soybean meal is still pretty high. It was that time $400, $420. But still the soybean meal is $530, $540 per metric ton. I'm talking the per metric ton prices. So if the material prices will go to the same level, the percentage of profitability performance will go certainly to maybe the better level because of the volume, the scale of the I mean the economy of the scale, that will go better even. But if the material prices will be going more than this, then overall profitability will be certainly better than the 2000. I mean, if you look at the per share profitability, that will be better. That will be better because of the expansion, because of the volume increase. That will be better, but percentage-wise, if you look at the percentage to the sale, that might not be possible until unless we are going to the same material prices level. Cost of electricity is also impacting. Fuel cost is impacting. So these factors I don't think so will go to the same level. But overall profit will be certainly per share and overall number that will be better.
No, that's I think.
Okay, gentlemen, we have left only 5 minutes, so if you can just give chance to other people to ask.
Sure. I'm done. Just last question, and I'm done with that. If you could just give your thoughts on any dividend payment going forward. That's it from my side. Thank you so
Which
much.
payment?
On dividend payment. Dividend payment.
That's a board decision. So unfortunately, because that will be based on the performance, board of director will decide. Before that, it will be for us talking anything will not be. I mean, it will not be good.
Exactly. This will be a shareholder decision in the AGM. Abu Nafi Arafia.
No, first board of director will decide.
Yeah, board of director will recommend for the shareholders.
Yes.
Yeah.
Yes, right.
Any more questions from other? Okay, at the end, thank you everybody to attend our second discussion session for the first 6 months in 2023. And we hope to see you soon next session, inshallah. Thank you very much for everybody. Thank you.